Hi, what's up guys? GatieTrades here, back with the next episode of my series, giving you guys my entire trading system and exactly how I trade every single day. Today's going to be part 4C. We're going to be discussing the trading model that I use, which is the daily candle power of 3 model. So using daily profiles to get a high probability trade in the New York AM session. So if you haven't watched step 1 to 4, please go back. I know I say that every time. I put them in a specific order. You cannot simply just skip, right? The daily candle power of 3 model is very important because if you can use what you learn from models 1 and 2, it's going to be very crucial because as I've been saying throughout the series, my best trades have overlapping models and confluences. So the best thing I can see, for example, is a New York manipulation that aligns with my Judas swing model when the daily power of 3 is already in play. Obviously, trading psychology and everything I do pre-market to determine bias, expansion session or ranging session. I've already kind of talked about that. We're going to touch on that a little bit today when we talk about the daily profiles, but let's get straight into it. I don't want to waste any time. So this is the criteria for the daily candle power of 3 model. So first things first, anticipation of a large range day. Now, when I say large range day, I don't mean expansion because I'm happy trading seek and destroy. I need to anticipate a large range. I don't want to see super tight candles up and down, up and down, up and down. Up and down, up and down is fine, just not in a small range, like a 50 point, 60 point range. So I'll use the average daily range to determine that. And if I can anticipate a large range day, whether it's one-sided expansion or a large range back and forth, I'm happy to trade that day using the daily candle power of 3. Next, obviously, the most important step of all of my models is identify a clear drawn liquidity and directional bias, but this time it needs to be for the daily candle. So ideally, we're trading towards a daily level or from a daily level. After I have this drawn liquidity, I need to be able to identify the daily profile. So only 3 profiles I use, and that's going to be the New York reversal, the London reversal, and the seek and destroy profile. Those are the 3 that I trade. So if I can identify any of those 3, will not be using this model in my trading day. The next objective is the higher time frame PD needs to be reached. For me, this is M15 or greater. And then displacement from the higher time frame PD rate in the context of the profile, of course. So I'll include that in. And then from there, entry model selection 1 to 6. So I don't need to enter on a fair value gap or inversion. I have 6 entry models that can get me into a trade. I'm looking to adding one more, just haven't back tested it yet, but I know it's probably going to be good. So getting into the trade is not a problem, but I do need to see displacement from the higher time frame PD rate. So either that means an immediate inversion fair value gap or a fair value gap leaving the range and the higher time frame PD rate. And then from there, we go to our entry models. For trade management, I'll look for standard deviations to align with the target from the daily power of 3 manipulation leg. If you don't know what that means, don't worry, I'm going to be covering it in this video. Look for opposing daily liquidity as a target. So if the good thing about this model and the reason why it's a really good one is if you're correct about your daily power of 3, you're most likely going to get a large expansion and you're going to get really good risk reward on a day like this when you have a clear expansion day. A lot of people just trade expansion days using when they use ICT. I'm happy trading different conditions, but when you do get a classic daily power of 3 and you can see it very clearly, you can get really good risk to reward because you know the daily candle is going to be expanding. You know you can hold on that trade to where the daily liquidity is, and you can also look for final targets past the daily liquidity. Because the daily liquidity is like the minimum that's going to be met. So very good model in terms of risk to reward and getting really good. It's really good for your P&L curve. My best trades in terms of risk reward will be usually have some sort of daily candle power of 3 model involved. So let's go to the charts. I'll be teaching you the profiles that I use. I know I'm not the best teacher. I'm just kind of been showing you guys what I do, but this time we're actually going to do some teaching. So first things first, just know that all the black boxes are Asia session, which is right here. Blue box is London, green box is New York AM. So the first profile we're going to be talking about is the bearish London reversal and the bullish London reversal. So this is when London will form the high or low of day. So this is the template I'm going to show you guys. This is basically what it's going to look like. If you've been watching the series, you know we've already taken 3 trades using this daily profile. And we caught really good trades because we were able to call out the London high or low of day. And we were able to anticipate what was going to happen in the New York session based on that. And we got really high probability targets, and I'll show you how. So in the bearish scenario, usually Asia will accumulate. If Asia does not consolidate or accumulate, so right here, it's not going to be that clean of a power of 3. It's going to be hard to figure it out. But you want to see a manipulation in London. From where? Because I know identifying the manipulation can be difficult. It's from the true day open. So right here, your Asia session finishes. You're going to have midnight opening price right here. You want to see manipulation from that price point. So go to your 1 minute candle, mark out 00.00 Eastern time, manipulation from there. That is the manipulation I'm looking for. So, this is kind of stuff you're not going to get from the trading book, right? You kind of need to watch these videos and understand what exactly what I'm looking for. I'm not going to include all these little things because I already know the information. So manipulation from midnight opening price. How far does it manipulate? Well, one thing you can do is use standard deviations from the Asian range, right? So you can see how far it could potentially manipulate. Another thing you can do is, but you need a high time frame PD array right here. So I'm going to mark this out with a red line, and this is a must. So sometimes what will happen is London will do this, and you'll see, oh, London manipulation, New York continuation, but wrong. It needs to do this according to your daily bias and directional bias for the daily candle. So if this happens and your daily bias or daily candle bias is bullish, this is not a daily candle power of 3 model. You got to look for something else, right? And the second criteria is this needs to be a higher time frame key level. So 1, directional bias manipulation must be opposite, right? 2, into higher time frame key level. So red line marks your higher time frame key level. So from midnight opening price, and then the last thing I'll include is from true day open. So these are the 3 criteria for the manipulation. So you have accumulation, ideally, and then you have manipulation from midnight opening price, opposing to your directional bias, and into a higher time frame key level. Then and only then can you anticipate, not always, but I'd say like 9 out of 10 times, anticipate distribution in New York session. Where can you anticipate your distribution from? Great question. How do you know how far back? To do this, I look at time, and I just look at the higher time frame PD arrays. So if you go to the checklist, you're going to see it already says higher time frame PD array reach. This is what I'm trading the New York session. But what you can do is you can mark out the discounted premium of this range, and you look for a premium array. You can do that. You can also look for timing. So if we reach, for example, a 15-minute bearish fair value gap, and you have the displacement from it, and it's at a 950 macro, it lines up with 10 a.m. silver bullet, you have an immediate displacement through, that's how you know, right? It's not about which PD array, it's about at what time, right? So if we get into there at a perfect time where you're expecting a displacement lower and then you get that displacement, that's the key. It's about the time, right? So 9:30 Judas. If we come down here at 9:30, we immediately go up. Well, there you have 2 models aligned perfectly. One of my best trading models is when I have a daily power of 3, so a London reversal, New York continuation, and this price leg is your 9:30 Judas for New York. That is such a high probability model because this low is going to get run, and we're probably going to get targets on the standard deviation from the manipulation leg. So how can you get targets? You can use the London leg, so like this, and then you can also use the New York leg, which I taught in the Judas swing video. So if you haven't watched that, you should definitely watch that. I like to use the London leg because that's the daily candle power of 3, so you can kind of see where it's going to go to, but this is the idea of that. And this is pretty much the same thing but opposite. So accumulated, manipulated lower, again, into a higher time frame key level, which would be right here. And then from midnight open, so midnight open is going to be right here. So manipulation below towards the bullish bias. This is a valid manipulation. Expect retracement in London, whether it's 50%, whether it's a 15-minute fair value gap, whether we take out lows, look for an S&T, all that kind of stuff. Look for confidence, look for a new day opening gap here. Look for a first presentation from previous day, all that kind of stuff. New week opening gap, all that kind of stuff. Any key levels in this range that overlap with the London range, it's a high probability trade. Look for your pullback into a discount. Look for your potential 9:30 Judas, which is your highest probability setup in this model. And then look for your expansion. Use standard deviations from London. Use standard deviations from New York manipulation to get your high probability targets. All right. Hopefully everything makes sense. If you have any questions, ask me in the description. Next slide. Bullish New York manipulation distribution. So sometimes, for example, in this example, London does the manipulation from midnight open, right? It's London. But sometimes London doesn't do that. Or sometimes London will, let's say, do this. It will go lower instead of higher. Well, in that case, this criteria is not met. But sometimes you can still have a daily power of 3. So how can that form? It can form like this. So ignoring the Asia session, if Asia expands, that's a different story. But right now, ignoring the Asian session, this is a bullish New York will manipulate and then distribute. This tends to happen with 8:30 news, so high impact news days. Because you'll have 8:30 news, which sometimes will manipulate. At then 9:30, you see the pullback and distribution. Sometimes it'll just distribute. Sometimes it doesn't need to. Or also, sometimes you have 9:45 news or 10 a.m. news, in which case you can see 9:30 manipulation and 10 a.m. distribution. So all about using the timing of the economic calendar. So 8:30 news can manipulate, and then in which case 9:30 would pull back and distribute. That's possible. Which is just as this is where you can like tend to expect this the most, but it can form on any day. And then if there's 9:45 or 10 a.m. news, you can expect 9:30 manipulation, 10 a.m. distribution, and all that kind of stuff. So what does it look like? London is in a range. London has not done anything significant. It can be like this, but and London closes inside the range. New York comes. When does New York start? 8:30. The ICT kill zone for New York session is 8:30 to 12. It's actually 8:30 to 11, but I extended to 12 because sometimes lunch can continue. So not always, which I haven't talked about that, and I don't usually trade lunch, but I extended to 12 because lunch can continue what happened in New York AM session sometimes. So it's right here if you forgot. So right here, 8:30 comes. London open. This is London. This is New York manipulating London. But we need to be bullish, and we need to be bullish. That's the key. If you're not bullish, then this is not valid. The bias comes first because your daily profile is going to be wrong. And then very simple. After the manipulation, expected distribution. So it can consolidate, manipulate, and then expand. Sometimes you'll get a pullback here instead. So it'll do something like this. I'll just redraw it out. So sometimes, like let's say you're consolidated in London, you have 8:30 manipulation, 9:30 distribution. That's one way it can form. The other way it can form is it'll take the high, and then it can pull back, maybe around silver bullet, maybe 9:30 Judas, right? Because if you're expecting a time manipulation, this can be 9:30 Judas. This can be expansion to 8:30, 9:30 Judas, right? This can be your 9:30 Judas into the range, higher time frame PD rate, you go long. Still New York manipulation, 9:30 Judas can be a retracement, and you can expect higher from there. And the next example, same thing. So accumulation manipulated the highs lower. You can use the manipulation leg from New York session from the London range. So mark out your London range. I'll show you guys an indicator that I use to quickly do this. And then from there, you use standard deviations, project lower. Very simple. The last daily profile, seek and destroy. When to expect seek and destroy. This is basically when the range in the day just keeps getting bigger and bigger. Doesn't need to get bigger. Sometimes it just fails. So sometimes it does something like this, where it can get like smaller or just stay like tight in the range. Basically nothing happens. We've had a couple of days like this last week where I actually did not perform that well. It's not my best days, but I do like trading it. Sometimes it's really nice. So when can you expect it? One, lack of news. If there's lack of economic volatility, lack of injection of volatility, smart money can hold price, the algorithm can hold price, whatever you want to call it. Price can be held into a range because they don't want to lose or gain profits, whether they're short or long. Smart money does not want to fluctuate their position on a day like this. They want to save it for another day. The interest is saved for another day. So price is held within a range. If large overnight expansion, my criteria for this is the average daily range is met. The average daily range is the last 5 daily candles. If the last 5 daily candles have a 300-point range on average, if I see 300 points or near that in Asia or London, expect seek and destroy in New York. Okay. If there's very high impact news the next day, so by very high impact news, I mean FOMC, I mean CPI, I mean NFP, and it can also be PPI, PMI can kind of do that too sometimes. Can also be Fed chair speech. Can also be election day, Jackson Hole Symposium. There's a couple of things that you can expect a seek and destroy condition. So the day before or day of is possible, before the news, and exactly. So this is what it looks like. Asia will usually consolidate, not always. Asia sometimes can expand, which I should do one more drawing. So sometimes you just get something like this. So Asia expands, London expands, and then New York just does something awful like this. And then lunch will usually do something. But none the matter. Asia consolidates, London expands the range, so it continues the range, so it'll go like this. And then expand, and then New York does something like this. How do I trade something like this? You just trade the ends of the range. So you see this is exactly what it's going to look like. It's very, very common. and it'll look exactly like this. So we took a trade like this week where we were expecting seek and destroy. I was not expecting. So this is how you know. If you see, let's just clear this all up so you guys can see what I'm about to explain. This is important. Sometimes the bias, so someone asked me in my live stream recently, which is why I'm saying this. They say, what's your bias today? And I say my bias is we range. I'm not expecting, for example, London manipulation and New York distribution. I'm not expecting this. I'm expecting this. So what's my bias? Well, if we're at the range high and I see, right, we do this and we just took out the range high, what am I expecting? Well, now I'm bearish. And if we come down here and it's a key time, maybe this is 9:30 Judas, maybe we expand from the low, we have a 10 a.m. silver bullet entry. Well, I'm bearish now, you know, because I'm expecting it to range. I'm not expecting price to take out a low, or let's say price takes out a high and then it just keeps going. I'm not expecting that at all. I'm expecting it to just fall back into the range because price wants to be held. So when can you expect that? We already discussed that. So those are the 3 daily profiles that I use. Hopefully they're pretty self-explanatory. If you've been following along with the series, you know we've already discussed London low of day, that daily profile, and we showed the trades that we took. We also showed the New York reversal profile, and I haven't showed any seek and destroy, but I will show you guys right now what it kind of looks like. So let's clear this up. 15-minute chart is usually where I look for my daily profile. So this is a simulation of seek and destroy. Why? Because we have expansion pre-market. You can see Asia consolidated, London consolidated, and New York session was very choppy. So we rallied right away from 9:30 to 10. So you could have seen this as a potential Judas swing if you were not looking at the chart correctly. But expecting a range day, you can see prices kept going back and then just fell back into the range. This is a very difficult market condition, in my opinion. So it's not even a clean seek and destroy. I'll show you guys a cleaner one. For example, right here. Let's look at Thursday. So what happened Thursday? London Asian session, right here. London session. What did I say previously? If you guys are looking at the boxes, I said this can happen. It kind of looks like a potential daily power of 3 because London came up higher. But then we have expansion pre-market. London's range is 78. Asia's range is 55. And the New York range is 118. So what basically happened here? If we were expecting a lack of movement, so we pretty much close around the true day open. So true day open is right here. So we close right. So this daily candle was just like a doji candle. There's wicks on both sides because this is your midnight open. So if you were to expect something like this, how would you trade it? Well, if we had a range high taken out. So for example, right here, range high. We can zoom out here. So range low, and then we come up. We're now at the range high. And when I say range high, I mean we took out the 830 high. So, or the 930 high. In this case, we came into a 50-minute fair value gap, took out the buy side, and we went lower. Notice how we didn't even go lower to take out the low. We just came back and went back in the range. This is what it looks like on the 1-minute chart. Not the best market to be trading at all, because if you're not keeping it tight, and you can see what I said, lunch just ended up going lower. So usually when the New York session will do this, you'll see the move happen in lunch. So we finally took out the sell side. But then again, what happened when we took out the sell side? We just came back up. So we took out the sell side, wait for displacement back in the range. Where is your displacement back in the range? Right here. But notice how we just came back because we came above 50%. So ideally, if you're going to play this, you need to mark out your discount and premium of the range, the current dealing range, and you catch nice shorts here. You can target 50% or above, but just know every single time price goes back into a premium, it could go back down, right? Because it wants to be held. It doesn't want to see one side expansion. And if you keep playing it out, I'm pretty sure this happens for the rest of the day. We end up taking out the range high. So once you take out the range high, what can you expect? Range low or 50%. See if that happens. So it's not very clean. You might have been stopped out, but we came near 50% there. Just a couple points away. Came back to range high, took out the high. Let's see if we get 50% of this range, which we did. So in this case, now that we have the new range, you would use this range. Came back to 50%. And that's kind of the idea. And you can kind of play that range up and down, or just avoid this day all in all. Now, I'm not typically good on days like this because the range was very, very choppy. So in me, if you were following my specific trading rules, I wouldn't even be trading this. I would look to trade ranges like this. This is a nice range. Overnight expansion. I'm expecting New York range, right? Overnight expansion lower. That's 170 points from the downside, from Asia high to the low in pre-market. So a range like this, if you go back to the criteria, it says identified a clear drawn liquidity directional for the daily candle, and then daily profile identified as seek and destroy. So if we identify seek and destroy and a large range day, right, we could potentially trade this if we have a directional bias, in which case it would be the equal highs here for Asia, which is the daily draw on liquidity, which is why we can use daily power of 3. So as soon as we're at range low, you can expect range high. It's kind of that idea. And as soon as we come back here, you can expect it down, right? As soon as we take out Asia highs, and this is the short that we took. So once we took out Asia highs, I'm not expecting it to do this, right? I'm expecting it just to go back into the range. So what happens after we took Asia highs? We had an immediate dump. Lined up nicely with your silver bullet. This is actually the short that we took. I think we took the breaker block. There's a fair value gap, small fair value gap right here. And this is your breaker. And a couple ways to get in this trade. You could have re-entered here. I think I actually took my entry. My re-entry was right here. After this a little accumulation, and we targeted the London lows. So it was something like this. But you can kind of see how we took range high, we took range low. Now, what does this also look like? This is also a market maker sell model. This all being your low resistance liquidity, right? You have 930 low sell side, and then all this low resistance liquidity. This is your original consolidation. Now, this was discussed in the other video. And then you have not a very clean distribution or reaccumulation, but it's there. And if you go on the 5-minute, it might be a little bit cleaner. So you can argue this, and then you have a large expansion, small accumulation right here, final expansion right there, and then your smart money reversal from the high time frame T level. Notice how we accumulated after taking the buy side, right? And then went lower. This is included in my market maker video. That's the best type of market maker model, smart money reversal to identify. You have the accumulation of shorts, and then the change in the state of delivery, which identifies the reversal, right? So that's pretty much everything I wanted to teach for the daily power of 3 model. If you have any questions, feel free to leave them in the comments or ask me in my Discord. Here is the final screenshot, whatever you want to do with the actual criteria. And next episode will be my 10 a.m. silver bullet model, right? So we'll cover that next. Just make sure you guys go back, watch the videos in order. If anything seems like it's being missed, leave a comment below, but just know I tried to put everything in the previous videos. They're meant to be watched in sequel, because to just take one thing from my entire trading system and be like, oh, this doesn't work or this doesn't make sense. Well, because it's not just one, you're just taking one piece of the puzzle, right? The key is to look at the puzzle as a whole, trade the entire system. Each part is related to another. This is how I made it. So please don't just take one part and be like, oh, this is missing information. You need to go back and watch the other videos, go back and look at the other slides. With that being said, I'm going to be signing out. See you guys live on Monday, 9:15 a.m. Eastern Time. Peace.